When will interest rates go down? After 10 rapid rate hikes by the BoC, raising rates to a 22-year high of 5%, crippling many households, you may be looking for a reprieve. Whether you're a buyer who's been sidelined because of the rising borrowing costs, or an existing homeowner with a variable rate mortgage, perhaps you've hit your trigger rate, or you have a HELOC, or you're up for a renewal soon. You may also be very discouraged because so much of your income is being eaten up by housing costs, and there seems to be no end in sight. According to Reuters Canada, Canada's annual inflation rate dropped more than expected to a 27-month low of 2.8% in June, led by lower energy prices. So the question on everyone's mind is, now that CPI is within the BoC's target range of 1 to 3%, are we getting any closer to when interest rates will go down? Hi and welcome. I'm Arlene Monzar, a dedicated realtor in the Toronto market with over a decade of experience in the field. In this video, I'll be examining that burning question: is the worst behind us, and when will interest rates go down? If you have any real estate questions that I can help you with, please feel free to either leave a comment or you can reach out directly to me, and my contact information is in the description box below. The BoC creating its own inflation by raising interest rates. While the BoC states that inflationary pressures are proving more stubborn, it has been noted in Statistics Canada that 30% of CPI can be contributed to the increase in mortgage interest costs. The BoC has been creating its own inflation over the past several months by raising interest rates, thereby creating a vicious cycle. In a recent CBC News article, it points out that while fighting inflation is complicated, the Bank of Canada's own interest rate hikes are actually driving inflation higher, with the mortgage cost component of the CPI climbing 30% in the latest Statistics Canada data. Francis Donald, Global Chief Economist at Manulife Investment Management, stated that if you take out mortgage interest rate costs, then inflation is running much closer to 2.5%. So does that mean inflation will rise again in the coming months because of these interest rate hikes? There is a strong likelihood it will. And the Bank of Canada acknowledges that inflation can rise again. However, they don't acknowledge that their own interest rate increases are a significant contributing factor. If you're finding this content to be helpful, I encourage you to show your support by liking this video and by subscribing to my channel, and I thank you for your support. Cheap oil and interest rates. Oil permeates every aspect of our lives. It's not just at the gas pump, said Laura Lau, Chief Investment Officer with Brompton Funds. When interest rates increase, the oil market tends to experience substantial impact with declining oil prices. Higher interest rates typically lead to reduced economic activity as borrowing becomes expensive, causing businesses and consumers to cut back on spending. This slowdown in the economy results in diminished demand for oil as industries use less energy and people curtail their travel and consumption patterns. The interconnectedness of the global economy plays a significant role in this relationship, as higher interest rates can lead to reduced investments, manufacturing activities, and consumer purchasing power, all of which indirectly affect the demand for oil products. However, while the relationship between interest rates and oil prices is complex, it's influenced by geopolitical events, production levels, and global economic conditions. In a 2012 study by Aurora and Tanner, they determined that there's an inverse relationship between interest rates and oil prices. They concluded in their study, the first is that the oil price is consistently responsive to short-term US and international real interest rates, underlying the importance of storage. Second, oil prices have become more responsive to long-term real interest rates over time. Please note that the US and Canadian central banks tend to increase and decrease interest rates in tandem. According to a CBC article from last year, central bankers and politicians hope that rate hikes are the cure for what's ailing Canada's economy. But it might actually need a shot in the arm: cheap oil. The governments and central banks simply can't deliver. So while oil prices have come down from the high of approximately $116 US a barrel in May of 2022, near the start of the interest rate hikes, to the current price of $79 US a barrel. However, according to the newer CBC article, gas is still expensive in historic terms, but compared with last year's highs, it is much lower. bringing down the annual headline inflation figure. There is an argument that until oil hits $65 US a barrel and holds steady for a month, we won't be seeing any interest rate decreases. Can we expect lower interest rates in mid-2025? No one knows exactly when we'll start to see lower interest rates, especially if the BoC has already stated that they are prepared to increase rates further, and they also don't expect to hit their 2% inflation target until the middle of 2025. We may be in for more pain during the next year and a half, particularly if their own interest rate increases impact future CPI numbers. In the meantime, those of you who are up for a mortgage renewal, start shopping 4 months prior to your renewal date. Look to secure a preferential rate that you could potentially use to negotiate any offer that your current lender sends you. This is the time when you need to be vigilant and shop your rates. If you're looking for strategic real estate advice, please feel free to reach out directly to arrange a consultation. We can have a Zoom call or a telephone call at your convenience and discuss your unique situation and develop that optimal strategy to help you achieve your real estate goals. My contact information is in the description box below, and I look forward to hearing from you.